Welcome to the Century Bank Check-In. I'm your host today, Janet Johnson, and I have two very special guests with me. I have Chris Jones. He's our Chief Credit Officer.
Thank you,
and
Janet.
I have Michelle Kirkpatrick. She's our Mortgage Loan Officer.
Yes, thank you.
They're both here at Century Bank, I'm proud to say. And today we're going to talk about mortgages, construction. We're going to talk about personal, commercial. We're going to talk about approval processes and how easy they are here at Century Bank and everything in between.
Yes.
So let's start with Michelle.
Okay, great.
Michelle, I want you to tell us about personal mortgage. Somebody comes in to get a mortgage, and especially right now, I want to hear a little bit about first-time home buyer. I know you have a lot of people that come in, young people, they're looking to buy a home, and they really don't know what to do. And I know you are an expert at hand-holding, so.
Well, okay. Yes, I would like to start by saying first-time home buyers are my favorite customers because they're so excited about this process in their life and this milestone. Yes. So basically what we do here at Century is when they come into me or any borrower comes in, I meet with them, we discuss what they want to happen. And then from there, we start the approval process. Basically gather some information. I'm generally going to want probably 30 days worth of pay stubs, 2 years worth of W-2s, and 2 months bank statements. That gives me a very good idea of what we're dealing with right off the bat. Basically, to start with.
That doesn't sound like a lot.
No, and it can be very intimidating, but it really isn't.
I hear, there's so much. That's not a lot at all.
Not at all. So I can look at that information and, like I said, get a good idea of what we're dealing with. And then from there, I pull credit, make sure all that's good, and we're off to the races. It's great. And then I can issue them a pre-approval. Okay. They can go shopping to find the home of their dreams.
Okay. And that's pretty much for any home buyer.
Mm-hmm.
But you're really excellent with the hand holding because I have sent.
You have heard that?
I have sent referrals over to you, people that I know, customers.
I have too.
They have said that totally. Michelle is
good. Yeah. I'm very glad to hear that.
And for the first time home buyers, it means a lot. I don't know with y'all, but when I bought my first home, I had no idea exactly what I was doing. I really didn't. I needed guidance.
Whatever you say.
And it was a referral from somebody else, and I was dealing with the mortgage originator. And, back then, though, we're talking early 2000s, so I'm showing my age a little bit here.
And I won't talk about mine.
But we're talking about, I think
my
first rate, the rate on my first house was 9.25%, I think.
Wow.
Early,
Yeah. Mine was 8.5.
Wow.
Didn't blink an eye. And that was in 98.
Yeah. I don't remember my first home rate, but I do remember starting in banking, rates were like 18%.
Yeah.
Oh,
yeah.
Now,
when did you start, Janet?
I'm totally aging myself here, but it's true.
Right.
Yeah.
So, looking at
that was a tough market,
right? The way we are now, we're thinking 7 is high, but
right.
Well, actually, over a 40-year history, I actually did this research.
Oh, you did?
The average rate is 7.4, so we're below average.
How
so
that's that is good.
Is that where we are right now on the rates?
No, we're at 7.
You're about
6.875.
Gotcha.
Yeah, so we're doing pretty good. Okay. Yeah,
it's come down some.
Yeah, come down a bit.
Which so anyway, tell us a little bit about, I guess, like escrow. I hear a lot of that too, like how that.
Okay, so what is an escrow account? Is that what you want to know?
Is it required, and how does that work?
Most banks will give you the option to waive it if you have a certain amount of equity in your loan. Maybe for a certain fee, a small fee, they might waive it.
Okay.
Escrows are when the bank collects money for insurance and taxes so that they can pay those items for you annually. And it's just part of your payment. It's all wrapped up into one, so you don't have to worry about paying them separately. I've done it both ways, to be honest. I kind of like having it in my payment because in Alabama, the taxes are always due around Christmas. So, that's just extra money you'd have to come up with.
So basically, you're putting it towards that every month when you're making your payment.
Right.
And then they take care of it.
Basically, you're putting 1/12. Yes.
I've always escrowed, so I think that's, that's
Yeah,
good. But
it's
I'm a
easy.
budgeter too.
Yeah.
So.
Right.
Yeah. There are
I
some
like it.
people that absolutely do
Yes.
not want it, and that is fine.
Mhm.
As long, and I do recommend that they be organized people,
Oh,
because you have to keep up with
absolutely.
when they're due. I
Mhm.
mean, you don't want to miss your taxes, because that
No,
could be bad.
you really don't.
Or
Your homeowners?
insurance. Yeah.
Right. Exactly.
Yeah.
Yes.
Well,
So-
banks prefer escrow for the
Yeah.
sheer
Right.
fact that
It helps their-
it helps them. It makes
security.
sure that
hmm
that there is proper insurance on the property
Right.
and the taxes are being paid.
Yeah.
That's true.
Yeah.
Well, and both of y'all can talk about construction.
Yeah,
So
sure.
I know when I was lending more, I did a lot of land loans,
hmm
which we have a fabulous product for land.
We do. Mm-hmm.
So both of y'all can talk about construction on personal side,
Mhm.
commercial.
Sure.
And Chris, you do commercial developments as well.
I do.
A
Yeah,
lot of those.
I do.
Yeah.
I do.
Yeah.
So
You want to start? You want me to start?
Well, sure.
Okay.
I mean, I am the chief credit officer of the bank, but as you know, working at a community bank,
we have a lot of hats.
you wear a lot of hats. So
That's right.
not only do I, assess risk and keep a portfolio of the larger credits and do annual reviews, I'm also in the Fairhope market, which is really Baldwin County market, and I do really acquisition, development, construction lending, commercial lending over there as well.
Right.
So we're seeing a high amount of activity going on in Baldwin County for sure. A lot of people are moving into the area. I'm seeing a ton of people moving in from the West Coast, up north,
Oh, wow.
Texas. There's a lot of construction, a lot of development going on.
Okay.
Absolutely. So on the construction side, it's pretty simple, really. I'll do spec lending for builders. Typically they'll want to build one or two specs.
That's great
and,
that
yeah.
it's really great that we still do that.
Well, absolutely.
So-
We'll do land lending as
Yes,
well.
which-
There's not many banks that do that.
That is right.
So, we'll typically, for any type of like a construction loan, anywhere from 12 to 18 months, I'll give the builder time to build the house.
That's a lot longer than it used to be.
It takes a lot longer to build
Okay.
nowadays,
Yeah.
especially
Supply
with the
shortages,
supply
yeah.
shortage that we had going a
Right.
while back. And this all
Mhm.
stems back to, going all the way back to COVID, really. Yeah, when COVID
Because
hit.
I was doing construction. It was
you know.
pre-COVID, and they never took 12 months.
Oh, no.
Oh,
They could build a house in 8 months, 7, 8
Right.
months, and it'd be done.
Mhm.
But now you have to pre-order all the windows and
Okay.
Yeah.
lumber went out the roof. Lumber's
Yes.
kind of come down a little bit. So yeah, I typically work with the builders, and it's just a same product as she offers.
Right.
Interest only.
And you have some
monthly.
good relationships.
I've got
over there.
wonderful
So-
relationships that I've
Right.
really gotten to know through
Which helps a
the Home Builders Association
Okay.
is such a wonderful group to be a part of, and we're a big member with them. The bank is, and so anyway, yeah, I do a lot of construction and even residential lending for subdivisions. We
Yes,
do
that's
that
right.
as well. Have a few subdivisions going. Office warehouse flex is the big thing nowadays. So we'll
Flex.
do flex buildings where you have an office in the front and a warehouse in the back.
Oh,
So
okay.
typically
That's-
that's
yeah, I haven't heard
the
that term.
I
hottest
haven't
thing
either.
going on now. A lot
I
of
heard the term.
so that's doing some of those. So we're pretty. Our niche here with Century Bank obviously
Yes,
is real estate.
it
We
is,
like real
yeah.
estate. We will do some asset based lending, but for the most part. We know what our niche is. We've been around since 1903. We're more of a real estate bank. We like land. We like real estate. Now, for the right clients, certainly we will go outside the box. But yeah, and so construction lending is, I'm going to lend money for them to build whatever they are going to build,
Okay.
whether it's a flex building or a construction loan for a residential home. We call it a spec. It's a speculative loan. A builder will build a house and then, hopefully sell it within the next 6 months to the end
Yeah.
buyer. And that's where Michelle comes in on her end.
Right.
So what I like to do is when I do a development loan, say I'll do a 200 lot development, and we'll do the development, and then I'll get with the builders and we'll do spec loans to the builders as well. And then I like to call it soup to nuts, right? So we'll do the development all the way to the
All
end
the way to
user
the
Yep.
with
end.
Michelle.
That's awesome.
Yep.
We'll even finance the land, right? So we'll do the development, finance the lots for the builder. We'll do the construction for the builder,
Wow.
and then hopefully we'll catch the end user.
Inline.
Which is
Yeah.
why
on the
you have
end.
great relationships with builders, and
So it's taking
we've got it
time.
streamlined
It's
though
not
now.
something that you just walk into it. Sir,
That's
I've been
right.
doing this since early 2000s. So I went through the whole 2008
Eight.
9, the
Yes.
Great Recession, learned a ton there.
Yeah, I think we were
The
working
underwriting
together.
now is so much different. And I know, Michelle, you can chime in
Oh
on that
yeah,
as well.
underwriting's
And yours is different than yours.
yeah.
So
Yeah, she's the
Yeah.
whole qualified mortgage
Right.
side. You know,
you're the in-house.
the underwriting back then was so much
Mhm.
less stringent,
Mhm.
right? And so that's kind of what created a little bit of the bubble. People were getting into their homes that they really
Yeah.
couldn't afford.
Yeah,
I mean,
And-
honestly,
that's right.
there were products that if your credit score was a certain level, stated income, stated asset.
Right.
Now, it had to be
Yeah.
a high credit score, upper sevens.
When we bought our house
But-
22 years ago,
yeah.
I mean, I never even went into the mortgage. She didn't ask for anything. I had my pay stubs. I had
Yeah,
all the things ready.
I
and I'm
know,
like,
I
don't
know.
you need these things? And she's like,
And
nope.
I'm telling you, as
Like,
originator,
wow.
it was a great time.
I know. I'm like,
You know,
Right.
we
that
were,
is
you
like
know,
really easy.
but it has gotten back to basics.
yeah, which is
You
a
know,
good thing.
and it's a very good thing.
Yes.
And now we make good products. So,
Right.
yeah, that it was a
That
good
was
time. It was a
crazy.
good
I know, that was
time.
crazy.
Well, everybody was making money
Yeah,
back then.
yeah.
The originators were making money, and the
Mhm.
banks were making money selling the notes off.
Mhm.
And
Until
then
they
the
weren't.
investors were
Right.
bundling all of
Until they
those
weren't.
together, mortgage, backed
Mhm.
securities,
Mhm.
selling them as securities. They were making money. People that were stamping them all AAA credits were making money.
Yep.
And in
Yeah.
reality, they really weren't.
They weren't.
And so,
Yeah.
if you didn't learn back then
Yeah.
I don't think you should be in
Yeah.
banking right now anymore.
I don't think it'll
You know,
ever go back to those
I don't either.
terms.
I
I
hope
mean,
not.
we've learned, I would hope.
So, while cost and prices of building now are really high, I mean, we're talking $300 a square foot right now to be building
Oh my
over in
goodness.
certain areas in Baldwin County.
Wow.
Really?
Yeah.
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 Popular little place over there.
I know.
Well, inventory is
I did not know
short
it was
in Baldwin
300.
County. I mean, you've got a shortage of inventory and lots. So the builders, they make money by building homes. And if they
Yes.
don't have lots, then
Yeah.
that the demand is there, and so many people are
Mhm.
moving in, and
Yeah.
that's
And
what
so
we're
your
seeing
office
right
is
now.
located in Fairhope, right?
I'm right in yes,
Yes.
directly right
there
off
at
of
Edwards.
98. Yep.
Yep.
Mhm.
Such a pretty building.
But I travel over. I'm here
Mhm.
in Loosedale as well, and I'll travel where I need to go. But yeah, so on the that's typically what we'll do on that. I also do commercial lending. Purchases.
HELOCs?
Mhm, mhm.
Business line of credits,
Yeah.
whatnot. Yeah, absolutely.
Okay.
Mhm.
Yeah.
And Michelle, your construction
Yeah, I'll
is
continue.
very streamlined
Yes.
as well, right?
I am residential,
Yes.
obviously. And so someone comes to me, they could be a first time home buyer still.
That's right.
That might want to build for their first home.
And tell us too, I'm sorry to interrupt you, but tell us too about, we can I know I can make the land loan and then they would pay on that land a couple of years and ready to build.
Right.
And then we could take it from that point.
Yep. Roll it into one.
Which is,
basically
I don't
we're going to
think a lot
pay.
of people
Yes. They don't realize that.
they
yeah.
don't have to have their land paid for.
That's right. That's right. You can when I do the loan, I'm going to pay off that land loan and it's all wrapped up into one.
Yes.
And we do our construction loans for 12 months. So they have 12 months to build the home, to get that done. And really it is so seamless because I do get them approved for a permanent loan first. So I've got all their information. I've ordered the appraisal. I know exactly what the value is going to be. And then I use all of that same information when I do their construction loan.
Oh.
So it just speeds
Yeah.
up the process. I mean, it really is a very smooth, streamlined
Yes,
process.
it sounds
And I
like
think
it.
the customers and builders will tell you that for the
Well,
most
I
part.
know my customers
Yeah.
have told me that
Yeah.
when they're
Yeah.
like, Michelle was great. And
Yeah.
it was
Yeah.
just so, it just went. We didn't have to worry about anything.
Right.
So, and
Right.
back in the day,
Yeah.
I remember people coming to the bank saying, I want to build, but I'm scared. I mean, we don't want to get divorced because it was
Well,
such a
now that's a
nightmare.
totally separate
Yeah, it was such a
situation.
nightmare.
Right.
when
Yes.
you're dealing
No,
with two,
to
husband and
build.
wife.
And
yeah.
nowadays,
Yeah.
the builder takes it and goes.
Right.
And I think that probably helps that situation.
So
out.
that's true. Now, I will say I've I did a construction loan for somebody, and they did get divorced by the
Oh,
end of the
no.
construction loan. They
Really?
absolutely did. Absolutely.
Really?
Oh.
Yeah.
Oh,
No,
gosh.
it's a stressful time to build a
Yeah.
house.
Yeah.
You know, it's stressful between that time and if
Yeah.
you know, you're trying to pick out all your little knobs and the paint colors and
Yeah.
everything else, and
Yeah.
next thing you
I
know,
want floor. I want
it
now
does
apartment.
happen. Yeah.
Yeah.
But
Yeah.
the process that you were talking
Uh-huh.
about, I just, if you don't mind me
Oh, no,
cutting
no.
in here, you know,
Go ahead and cut in, Chris.
well, I think that's where we stand out differently than the other
Mhm.
banks. I think that's. I've worked at 2 other banks prior to this. They were bigger banks, and you know I'm glad to be at the smaller bank. And for that is just for the sheer fact of the process. And I know you can attest to your
Yep.
end of
Local
the underwriting.
authority can
Local
sign off.
authority.
Yep.
So with me, you know, if you're a builder or you're a company and we're going to do some type of commercial lending, whatever it might be that we're doing, you're dealing with me from start to finish. You know, you're going to give me the financials,
And
right?
you're right. You're there. You don't have to call somebody in Birmingham or North Carolina.
I'm not taking your
Yeah, I love
financials.
that,
I'm not
actually.
just being a facilitator. And no
Right.
knock on some of the,
Right.
you know,
Centralized underwriting.
centralized
Yeah.
underwriting. So, you know, some of the other banks,
Right.
they'll
kinda-
take your financials
Yeah.
in and they're going to put your financials in a queue.
Right.
Okay.
And then they
That
move
queue
on.
goes over to Dallas, Texas, or Orlando, Florida.
Right.
And somebody who has no idea who you are
Mm.
Yeah.
is looking at your credit, right? And they're going to say, "Oh, you either fit in this box or you don't fit
Right.
in this box." We're not like that.
No.
You're going to give me the financials. You're going to give Michelle the financials,
Mhm.
and
Yeah.
she's me or her.
Mhm, mhm.
Both of us. We're going to look at those. We're going to underwrite them right then and there, and then
Yes.
the approval process, depending on what the loan amount is, you know, is a little bit different. But you might have 1 or 2 steps to go through to get the final approval
Which
of
is
that.
why we take banking personally.
And we do take
Mhm.
bank,
And
absolutely.
We do.
We really do. And that you attested to that just then. I mean, we take it. We really take it as our own, and we.
Yes, I'm
Yes.
gonna take your application.
Yes.
I'm gonna underwrite your deal. I'm gonna put a package together. I'm gonna get it approved, and then I'm gonna be the one that works with you to get the
Isn't
loan
that awesome?
closed.
You never would have thought that back in the day when we were at other
No,
banks.
so
Yeah.
you're, you know, it and
It is-
no knocks on
No,
the other banks.
and
I'm
it
not
works for a
saying
lot of people.
as you get larger,
Yes.
as banks get larger,
Mhm.
you typically have to go to that because of the
Right.
workflow.
Yeah.
We're not there. We're a
We're-
true community
We're
bank.
at a good size right now.
And when I say we're a true community bank, I'm telling you now, I've been working at the other banks. We are a true community bank. We service the mom and pop customers. And this goes back, and I don't mean to change the subject, but I really like to go back to this
Okay.
because I saw it with my own eyes. When PPP loans came out in 2020,
Yes.
right?
Yes.
What were all the bigger banks doing at that time?
I got a
Because
lot
the
of
big
new
banks,
customers.
the big banks
Yes.
were, they got a fee. Let's be honest.
Yep.
It's just too
You
much.
got
Yep.
you got a fee for the amount of the loan that you made. So it behooved the bigger banks to work the larger customers 1st.
Mhm.
Your
Yep.
$5-6
So
million
your mom and pop
loans,
sat there.
because you're
Yeah,
collecting a
that's
fee
true.
off of that. You're not caring about the $3,000 loan to the hairstylist down
Mhm,
the road.
mhm.
You know what
And
I'm
we
saying?
were like, yes, come over here.
And
Yeah.
so that is why you saw in the second round of PPP loans, the Congress people realized what was going on, and they blocked the bigger banks and they let the community banks go in first. I don't know. I did the PPP loans, so I know in and out
you
of
were
how
in
that
charge of it at
worked.
that time.
But when I say we truly serviced our community, I 1000% mean that. And I'm talking hairstylists, barbershops, mechanics. I mean, just your mom and pop shops,
Mhm.
your retail stores here in downtown Lucedale.
Mhm.
You know, they got service. They got their PPP money.
They got it. I
And-
mean,
and-
they got just the same as a large commercial business that was been in business for 30 years as that person that just started.
You know, the other banks weren't
So-
even calling them back.
Right. I know.
That they banked.
I heard those stories too.
And so anyway,
But-
I am proud
Yeah.
of
Yes.
Century Bank for
Yeah.
that.
Yes.
I've
me
said
too.
that before
I know.
because you know you say you're a community bank, whatnot, but in reality, we service our community.
Well, service
So-
them not only by loans and banking, we get involved in the community.
right,
I mean, my gosh, after hurricanes,
Totally.
there
Yes.
helping the community. So I can honestly say that is true.
yes.
That is true.
So I got sidetracked there. I'm sorry.
That's okay.
But we were
We'd like
talking
to hear
about
all that.
we were talking about underwriting originally.
Yes, that is,
You
I
know,
wanted
and
to
so
make sure that we talked about our approval process. It's so different and great.
it is.
And,
It is different than the other banks. And so I'm the chief credit officer. I work with the other lenders as well, and so we all work as a team. You know,
Right.
our business banking center, and we do have other people that can help put packages together to get the approval. Typically, to get an approval on a business loan, I'll let her talk about
Yeah, I wanted
the
to know kind of
residential.
how long and
You know, if you got me all of your financials today and it's under a certain threshold, I can have an answer for you within a day or two.
that's awesome.
You know,
isn't it?
now if it's over a certain threshold,
Yes,
I'm not going to
of
talk
course.
thresholds, but if it's over a certain threshold, it has to go to an officer's loan committee, which that takes another day or two to get approval.
But because
So at the end of the day,
we're still that small community bank.
right, at the end of the
Yeah.
day,
Yeah.
I can have an answer for you within 4 or 5 days.
Because you can typically poll the loan committee.
And if I
right?
have to poll the loan committee or
That-
the board of directors to get a deal done, absolutely.
That can happen as well.
And it does happen.
Mhm.
You know, our board meets a certain
Yes.
time every single month, and if I have a customer that is really in need of something and I know I have to get it done, then I will pick up
And
the
every
phone. I
month.
can call
Is
board
that
members.
typical for a bank's board to meet every month? Do you think?
Yeah, so
I
the
think
board
it is.
members,
I mean,
absolutely.
other banks too.
Certainly.
Okay, I didn't know that they
Absolutely.
met like once a quarter. Or,
No.
Okay.
Some of the other banks will meet twice a month.
Okay,
You know,
all right.
just depending on what the workload is.
Okay.
Yeah.
Mhm.
Yeah, but that's
Oh,
our
yeah.
process on the commercial side. And when I say, you know, you are truly dealing with somebody, whoever the loan officer is, whether it's me or Dan or
Right.
anybody else, you know, it comes in, we work it all together, and it gets through pretty quick.
Yeah.
Local
And
decisions.
Yours, yes, that's the main.
Mine's a little bit
Yours is a
different
little different.
because, like I said, I do get the permanent loan approved first, so that Century knows this customer has funding to pay off the construction loan.
Right.
So, and that does have a different process. However, once that is done, I have the approval on that. We start the construction, and again, I use all of the same documents. So it is basically take those documents, put it together, get it to management. They sign off on it, approved.
Mhm.
Then basically wait on title, and then we're ready to go. So
And that process is usually how long do you think?
it depending again on
Yeah.
how quick everything comes in,
Right.
6 to 8 weeks total. So
Okay. And I know
yeah.
your appraisal is part of that process. And
sometimes
that's
they'll take
hard
2
to-
weeks or so.
Yeah.
That's
yeah.
closing.
Yeah.
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 That's yes.
yeah.
Right.
That's
So,
all the way to closing.
Yeah.
Right.
But that appraisal sometimes, you know, you have to wait a little bit
Yeah.
on that.
Yeah.
So
So that's
Yeah.
why. But yes,
That's
it
still-
really. I mean, for both loans to get approved, I think that's a very.
I
fast
think that's
process.
very
Yeah.
fast.
Mhm.
So
I would be pleased.
yeah, and so we also have an in-house product.
Yes.
You know,
That's
Uh-huh.
right. We sure do.
you
Yeah.
know, which is good. So you have, and I know enough to be dangerous when it comes
Yeah.
to what you do.
Mhm.
But as far if you want to talk about jumbo loans or anything like that, you know,
So our in-house will eliminate the permanent loan that I do. Basically, I'm going to get it approved in-house, and it's all in one type. Once that approval is done, then we just roll it into the construction. Or if I'm doing a jumbo and it's not a construction, you know, it's just like what he said. You get all the information, get it to management. I'm not having to send it off into a queue. You know, I get it to a person. They sign it. And,
So
Right.
why would someone want to do? Tell us why you would go possibly in-house and not.
Well, we offer a variety of other products such as jumbo that might be a little bit easier than
So
a
that's a
secondary
larger
market.
size loan.
Yes, and that would
that-
be over today would be
I know
over.
that amount
I think it's
changes.
804,
Oh, is it
805.
really 8
Yes,
now?
it has bumped up
Wow,
in our
that
area.
has.
Yeah.
Wow.
Good.
So,
I
yeah, it's
remember like
good.
650 the
Yeah.
last time
it
I-
used to be
Yeah.
605. I think,
Okay.
something
Yeah.
like
So
that.
somebody
That's
that's wanting $1
crazy.
million to build a home or over, you know, I offer them both. Secondary market sometimes will just have an adjustable rate that they
Yes.
could get, and they might want a fixed rate or, you know, a
Right.
longer term. So, but we do offer that on the in-house side. Yeah.
Well, that's great to know.
And that's, you know,
Yeah.
in Baldwin County, I mean,
Oh,
if
yeah.
you're
It's-
building in
yeah.
Fairhope or Gulf
You're
Shores
going to
or
get
Yeah.
West
800
Beach,
easy.
Yeah.
it's every
Yeah.
bit
The
of $1
land
million.
alone, you
Yes.
know, is very
Yeah.
pricey. Yeah.
And there's
So-
still some construction going on over there, right?
There's a ton of
Yeah.
construction going
Don't you
on.
have some things going now?
Absolutely. We've got
Yeah.
a bunch of
That's what I thought.
some income producing houses down on Fort Morgan. We've got
Okay.
Yeah, absolutely. Like I said, we got
Yeah.
some spec lendings. And
Baldwin County has, and I've been doing this for a very long time in this
Yeah.
area. Baldwin County, we've called it God's country.
Oh,
I mean,
yeah.
it is. People just want to be there.
They do.
I've
You
lived
know?
there since '87.
Yeah.
So
I mean,
I do
people
call
just
it
wanna be
God's
there.
country.
Yeah,
Yeah.
people just want to be there. So
It's grown
Yeah.
so much.
Yeah.
It really
And then-
has.
And then back over here, let's see, Michelle.
back over in Mobile.
You are in West Mobile?
Yes, I'm at the Cottage Hill branch in West Mobile.
Okay.
Yep.
Kind of gives us a good range.
Yeah.
of,
Well, even Loosedale,
yeah.
if you look at Loosedale now, look at all the subdivisions that are going up here.
Yeah.
Downtown has grown
I agree.
a lot. I mean, you're seeing it. More growth is coming back downtown. Every time I come out here, I see more and more people walking around downtown, more cars. You have a couple of different subdivisions that are going up, and D.R. Horton's kind of moved into the area a little bit.
In this area too?
Mm-hmm.
Okay.
Absolutely.
Okay.
Yeah.
I did not know that.
Mhm.
Well, that's, I mean, that's,
Yeah.
and then you know what? That does fit. Those people that want that little subdivision home.
Exactly.
It
Mhm.
really is nice to know that you have a home here, you're in a subdivision. Sometimes they have pools, sometimes they have, I mean, that's not so bad either.
That's it. I agree.
So,
Totally. Yeah.
Mhm.
No, so we're full service, nonstop. I mean,
And we work with all the builders. like
we
that
work.
as well, right?
We do developments as well with our takeout source being D.R. Horton. That's D.R. Horton's everywhere.
Yeah, they
Mhm.
are.
They,
I did
so
not realize they were over here though.
yeah, absolutely
Okay.
they are.
They are getting
So
around then.
we are staying busy, especially over in Baldwin County and Mobile County. Look, Mobile County's got a lot going on too. All of downtown. The port itself right now, the warehouse space, there's a ton of warehouse. There's another, I think it's a 2 million square foot warehouse that they just announced that they're going to be
Okay.
building
Yeah, I
down
keep
there.
reading about the.
I knew they have some new
with
contracts.
Train track
Mhm.
access as well.
Yeah.
So just a ton of, Mayor Stimson's done a really good job there.
Mhm.
I heard he's stepping down.
He is stepping down.
And but anyway, just we've got a lot of good
Mhm.
stuff going on right now.
Yeah, I know.
And
you read the
I don't
Mobile,
want.
I'm sorry.
No, go ahead.
The Mobile Chamber, they talk about the port. Our port in Mobile is, I mean, it's one of the largest, best ports in the country.
It is. I
So,
think we're in the top.
We're in the top.
6 or something
Yeah.
like that, somewhere in that range.
So
Don't quote me on.
I know.
that,
I was
but,
like thinking, don't
that's
quote me
a-
either, because
You
I just
but
remember
it's-
reading it, and I was like, that is.
Well, they
that's-
just
that's pretty awesome,
dredged the
though.
port, and so there's a lot
Yes.
going on.
And
on
my
the
husband's
water
down there, so I'm
there.
kind of excited about that.
Oh yeah,
Yeah.
and you're still active in the chamber.
Yes.
So
yes.
Janet and I used to work at the chamber.
We
as
did.
well.
Okay,
Yes,
okay.
We
back
did.
in
I'll
the-
drag Chris and Dan. And
Oh yeah,
Yeah.
yeah. No, it's good to be part of the community
Yeah.
like that, and,
Mhm.
and working with the chamber. I'm more of with the Homebuilders Association
Mhm.
now over in Baldwin County.
Yeah.
I'll actually be over in there tomorrow.
Oh,
In
good.
Baldwin County with Fairhope.
All right.
We'll be
Let's-
calling on our
I'll be there.
customers out there.
Very good.
Which
Yes.
is, part of my new role.
You're right.
We get out there and talk to our customers, and I think that's important as well.
And you're enjoying your new role?
Yes,
Okay, good.
yes, I
like to
am.
hear that.
I do. I really do.
Well, you wear a lot of hats, as we were talking about earlier. I know you do.
Well,
So,
yeah, that's what we do.
yeah.
So,
Yeah.
and
Well, your experience in banking helps with this new role too, doesn't it? I mean,
well,
because
in the day we used to always call. That was a thing. You got out there and you called your customers and your potential customers
Mhm.
because it's important to do.
Mhm.
And used to be if you didn't, somebody else would. Now I'm not really sure how other banks are doing that, but we are definitely making that a priority.
It has changed over the years.
Mhm.
Banking has totally changed, just in total regards of the next generations that have come up and with the cell phones and everything.
Oh yeah.
You know what I mean?
there's
I
not
mean,
a
it's-
the customer volume is dropped, right?
Yeah,
Do
well,
y'all
exactly.
see that
Well, all banks have kinda-
inside? Because
Totally.
now, yeah, everything's
Absolutely.
online.
Well, you can take a check and make a deposit nowadays. You don't
Amazing.
have to
I
go to
know.
the bank. You have direct deposit.
That
I
is
mean,
crazy.
I didn't
Yeah.
have direct deposit back then. You physically went to the bank, But
No, I'd have to
So-
call the number to get my balance. Do y'all remember that? The phone
No,
number?
because I've always worked at a bank.
right, exactly. Yeah, you always worked there.
I've always
so-
worked at a bank.
Oh,
Yeah.
okay, yeah.
23 years old, I think.
Well, yeah. I mean, just tell you a little bit about me. I started in let's see, 98. as a drive-through teller in Daphne. That's did the teller and
That's awesome.
slowly moved up in the ranks. I think I worked in every single department of the bank at some point.
Really? At some point,
I went
Yeah.
to new accounts, loan assistant, branch manager, portfolio manager, construction lender.
Yes. Well,
And I mean, it's just how the banking industry
which bank
works.
did you start at?
Colonial Bank.
Okay, so
And
you
so
were
Colonial
Colonial,
failed.
yeah.
Colonial
Yeah.
failed
Yeah, I
back in
remember.
08 and 09.
I remember.
That was
Mhm.
yeah,
Yep.
that was
Yeah, I was there.
tough time.
yeah. That was
that was tough.
crazy times.
Yeah.
It sure was.
So I kind of did the same thing. I started at Magnolia Federal. I don't know if y'all remember that.
Yeah.
yeah,
Union
absolutely.
Planners, then Regions took them
Yes.
over. But I did the same thing. I was a customer service agent in the mortgage servicing department. And now that is where everybody needs to start.
That's where you
More-
cut your
yeah,
teeth. Isn't
that's
it?
where
Were
you
you
Yes.
servicing?
So
Okay.
you deal with customers that are not happy, basically.
Right.
Okay,
Yeah.
that makes sense.
Yeah.
Okay.
But anyway, and then I did a little tellering. I wasn't very good at it. I like to talk to my customers, and it just didn't work
Really?
out well as a teller.
You
I mean,
didn't-
I would hold up the line because I'm talking to the
Oh, you would
customers.
talk to
Yeah.
them. Okay. That's
So
funny.
yeah, that didn't last. But I really, my end goal was to get into mortgages. So
Okay, so
Yeah.
you always knew that's what you wanted to do.
mhm.
So what was it that drew you to mortgage lending?
Because I do love to talk to the customers and
Okay.
get to know their story, and
Mhm.
and I knew. And I like the sales part of it too, getting out, meeting people and developing relationships. So that's,
It
yeah,
is. I mean, I thought about that at
yeah,
one time in my career as well. Is I talked about stepping over into mortgage.
yeah.
But
Oh, really?
I did,
Yeah.
yeah. But I don't know
Yeah.
why I didn't.
It
It was always something else that I was needed.
Yeah.
and
Right.
just kind of.
It's very
Not there.
rewarding, but very
So-
challenging as well. So,
Yeah.
good times and bad times. But
Well, when the market's
mm,
good,
when the
it's-
market's hot, you're
it's great.
swamped. When the market's slow,
you better save.
yeah. And it's
you better have
just,
saved during the good
you know,
times.
I don't know, a lot of sleepless nights, I guess, worrying
Right.
about things. But it is what it is.
It's kind of like the
so-
realtors as well.
Oh,
The
yeah.
same thing.
Yeah.
Is the market, it's
Yep.
ebb and flow.
Yep.
It's ebb and flow.
make a lot of money sometimes,
That's
and
Right.
you got to stockpile it. Yep.
Right. Exactly.
Yep.
That's just part of it.
But
Yes.
but I've loved it. I've loved it all these years, and I think I've gotten pretty good at it. So
Obviously.
yeah.
So we hear.
So yeah. Well, I'm glad you're hearing that.
Yes, yes. I've heard that many times.
yeah.
So
So
I have as well.
well, thank you.
Yes.
yes,
That's always nice to hear every so often, because sometimes you just don't know.
that's right.
You know.
Sometimes you only hear the bad things.
Yeah. It's like you're thick in the forest and you don't know what's going
Well,
on.
the way
you
I
know?
judge it, honestly, is are my customers referring my name to other
Yep.
customers?
Yeah.
You're right.
And so if they're doing that,
You
you're
know
doing
you're doing a
something
good
right.
job.
Yep.
I mean, that's
Yep.
you're doing the best that you
I
can.
always
I
felt
do the
like
best that you can.
I felt that
Obviously,
way.
you're not
Yeah.
100% all the
Or
time.
repeat
No.
customers.
Repeat customers,
You
or
got
you're
new
getting
customers.
referrals.
Right.
Mhm.
Hey, so and so is going to call you about a commercial loan, and I mean, I really appreciate that.
Yeah.
That's where I kind of set my benchmark.
Mine
Yeah.
was that too. And when I was doing land loans so much, the realtors, I had connections with so
Yeah,
many
absolutely.
realtors
Right.
that would, and then someone would call me, oh, so and so told me that you were the land loan person. Sure.
The landlady.
Yes.
Yeah, they didn't even, really, they knew my first name maybe. Or they'd
Right.
say, who does the land loans there?
I've
They would
always
get me.
said, you really get in touch,
Yeah.
as well, with realtors.
Realtors, I'm
Yeah.
telling you, that is the way to go.
Now, if
Yep.
you don't make a realtor happy, though,
Oh,
oh
I
boy,
know.
watch out.
Yeah.
Yeah.
Well,
So,
because they're
sometimes
trying to do the best for their
they are
customer.
too, and they're trying to
And
make
that's why
that's
I
their
always felt
paycheck as
very
well.
good when I
Yeah.
got all my realtor referrals.
So I do want to talk about our lot lending. I mean,
Okay.
that's something
Yep.
that
It is.
we as a bank literally have. We have the market on that. Some banks just don't even do land
Right.
loans. Now we have a special program that is more geared towards consumers, and I think it's under 5 acres, if I'm not mistaken. It's under
25.
It's under
Well,
25.
20, 25.
Okay.
Yes. Mhm.
And-
Is our program. Now we
Right.
might be able to do more, but you're not going to get that affordable housing.
Okay, so you
Yeah,
just have to put a little
land.
more money down,
You
right?
probably would have to put more.
So-
But our program that we have that we promote, that's our best deal, is the your credit scores over 640 and you got 680, over 680, 10% down.
10% down.
Oh, 10%? Okay, I thought
And
it
we'll
was 15.
finance
That's
up
awesome.
to 20 years,
If
depending on
it's
how big the
between
loan is.
640 and 680, it's 15%.
Yeah.
Okay.
Yep. Exactly.
Yeah, that's awesome.
And
So
so,
it is.
typically we know that, if you're buying a lot, for the most part, they're lots, and,
Right.
and, in a platted subdivision
Mm-hmm.
or whatever.
Well, and you're thinking home building too. When you're
Right.
building a home on property, you kind of want 5 acres.
I would love
That's
to be on
probably-
5 acres.
That's probably where over 5 acres, it's hard to get comps. Is that right?
Yes,
Well,
I mean, we can go.
That's what I hear.
You know,
Right, it
and it
is.
depends on the area too.
That's
if you're
true.
a rural area, it
You
might
might
be
be able to
common
go
to have
10.
18 or 15.
Okay.
But the benchmark's kind of 10. We kind of and then
Okay.
so
And see,
that
I
makes it a
remember
little
5.
easier. Yeah, yeah,
Things change.
yeah.
Sure,
Things
yeah,
change.
exactly.
Yeah.
Things change, but yeah, it really depends on the area though.
Okay.
Especially out here in the rural area.
Yeah,
So,
It's
it's
very
nothing
common.
to have 10 acres,
Yeah.
20 acres
Right.
out
Yeah.
here.
Yeah.
Yeah,
You're not
just-
getting that in Baldwin County
Yeah.
unless you're going to shell out some money.
yeah,
But,
1 acre.
But
You're
we'll
doing really
finance
good.
that lot where,
Yes.
and typically they're going to refinance and roll it into a mortgage with you, a construction.
right.
loan.
Mhm.
That's the whole thought process behind,
Right.
management and the way we're thinking
Yes.
is that, look, we'll finance that lot for you because we know eventually within a year or two you're going to be building your primary
Right.
residence on that.
And then
It's not really
And
for
that
investment
happens a lot.
purposes. It's a consumer product, So
Yeah.
Mhm.
if you're a builder or an investment person,
Yeah.
that's a different story. You're not going to fit in.
Again, we're offering everything we can to the borrower
right.
to make
We're trying to make it
process
smooth
seamless. Yep.
process
Yes.
for the consumer that can secure the lot, even though they know they can't build right now. And then maybe 2 or 3 years down the road they can build, and then she takes it and rolls that in.
That's right.
to
But
her
basically, you can
construction
come
loan.
to the bank, get your lot loan, your land loan, do all your construction all at one place, and it's just, how
Hopefully
easy-
have
how
your
easy
checking
is
account
that?
too. We like checking accounts.
Yeah, we do. We like checking accounts.
We
won't go into checking
like to
accounts
say
today.
We like to
I won't go
loan
into
money.
it, but we have the best checking account products.
We do. We do.
But that's probably for another podcast. So
Mhm.
anyway,
We'll stick with the loans.
that's
today.
right.
Yeah.
Okay.
Yeah.
So,
But definitely full service though.
Full
Yes.
service.
Yep.
Absolutely.
all right. So I was also asked about PMI insurance. If you can tell us a little bit
Oh, yeah.
about PMI,
The
how
dreaded
that works.
PMI.
Yes,
Yeah.
the dreaded PMI. I think the conception is they don't really understand it. Think they have to have it. So let's talk
you
about
pretty
that.
much do unless you have 20% down.
Right.
Okay. And so PMI stands for private mortgage insurance, and it's for the lenders. It gives them coverage if anything happens, if you go into default or before it's at 80%.
Okay.
So if you have 20% equity in your property, you're not going to have PMI. If you don't, you're going to have it. However, a few years ago, they had a wonderful change to the PMI rule. It will automatically drop off at 78% loan to value.
Oh.
So if someone puts 10% down, probably in 7, 8, maybe 9 years, they're going to be at 78%. If they haven't
Okay.
refinanced before then, and it's going to drop off automatically.
So
Before, you would have PMI
Right.
until the day you paid off if you didn't know that you could request.
Right, that is exactly
Right.
what I was thinking.
Yes, it automatically the
Okay.
PMI servicer drops it, and it on that when you get to 78% loan to value.
Not
Now,
bad, did you?
Well, back in the day,
That is
Back in the
I
day,
know.
it was-
Dang.
yeah.
You
We
would
were
have
like,
to
do we
order
need to get
a whole new
appraisal?
That's right.
and you would
So
have to
at
physically call
80%,
them.
you can request, and they will
Okay.
probably say you need an appraisal,
Okay.
blah blah blah, that type of thing.
Or wait
But,
till it goes
yeah,
down. to-
Yeah. So I mean,
So that's based off of the
That's good to hear.
appraisal at the time of purchase that they say with the 78%.
right,
Yes,
the original.
gotcha.
Yeah. Mm-hmm.
But they kind of, I guess it trends like the market though, as far as if homes are higher or lower.
Well, because what he's saying is that it goes off the original appraisal that when we do the loan.
So they're not really looking at the current market trends when they're doing
Right.
this. Okay.
Right.
All right.
However, though,
Things
yeah.
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 You've had those.
Sure,
fluxes and,
everything's appreciated
right.
right
Yeah.
now.
Thank goodness. I mean, because
Yes.
we were just now really recovering from 2008 and 9
Yes.
from what I've
Yeah.
seen. So,
Yeah.
That's true.
but yeah, it's a pretty simple process. I mean, that rule change has been good. for customers. But when the market, when the rates go down, we see a lot of refinances and they might be at 80% already. So, they refinance and don't have PMI.
Oh, that's right.
Yeah.
So I guess it would be beneficial, or not necessarily, unless they like maybe reduce their terms,
Right.
or 2%. It used to be 2%. If it was 2% less, it was worth it with
Right.
your closing
Right.
costs
To
and things like that.
compensate. Right.
Exactly.
But
If you can switch terms,
I know
lower
we
your term.
refinanced, and we had a 30, went to a 15, and the rate was 2%. And I thought, that's a win-win,
Right.
and it was.
It is.
Yeah, if we just paid it off.
Yeah, that's awesome.
Yeah.
So yes, I guess 2% though is still. I guess I was wondering.
The rule of thumb, like, if you
Yeah,
have a
to
2%
refi.
rate change, lower, yeah. Again, it really depends. And I will evaluate that with the customer. We look at all the different options
Okay.
and we'll say, okay, if you're going to save this much life of the loan versus this, so they kind of can make that choice on their own if
She
they.
does handhold it.
Oh, I know.
I don't
Same
think
with
it
cash
is.
outs,
That's
right?
awesome,
And
though.
so,
Same thing. Yeah.
And so,
Mhm.
I don't know. You tell me on your cash out. I mean, the rates typically a little bit higher on
Yes,
the cash
rates are a
out.
little bit higher, and
Mm.
we can only go up to a certain percentage loan to
Yeah.
value on the cash out. So,
Right.
yeah, it's there again, we have to look at it and see if it's going to be worth it.
That's
Right.
right.
Yeah.
Right.
But you help them with that
Yes, we
too.
do. We do.
Okay.
It's all about the customer at that point and
Right.
what situation they're in, at that time of their life.
Right.
That's true.
Now sometimes you might say to yourself, oh man, I know I can refinance while it's only saving me 1%, and I get a cash out, I can pay off this debt
Yeah.
and
Yeah.
re-amortize that loan
Yeah.
back out. It
And
helps the
yeah.
cash flow for the individual.
And with the rates being where
you
they
know.
are now, there still is a refi market because
That's good to
life
hear.
life events happen. People get married, they get divorced, they, become empty nesters, and there's going to be a need to do something with, either the property you're in or buy a new property. So there's always that, your family grows, you need a bigger home, so
That's true.
there's always going to be a market, just
I-
period, whether
I
it's,
totally agree.
where you work 24 hours a day or, you just have a standard day. I mean,
Okay.
but yeah, so.
It's the same on the commercial side.
I was just
Yeah.
about
Same
to ask you
thing.
that question on the
Same
commercial
thing
side.
sometimes.
But it does seem like y'all have not been affected by the rate increase as much as the residential side.
So interesting enough, you're right. And that I think that we're in
Good to
a
hear.
we're in a great location where we are.
Mm-hmm.
On a micro level, you're right. It hasn't affected us that
Mhm, mhm.
much. Prime right now is at 7.5. Okay. Prime was now you got to think
Which is
3 years ago, 2.5 years ago, prime was 4.25,
Yeah.
4.5,
Yeah.
Mhm.
something like that.
Yeah.
That's how
Yeah.
fast inflation
3.5.
really
Yeah.
got on it. And so it did slow down a little bit during that time.
Mhm.
People were cautious. They stopped
It was
doing some
halt there
things.
for a while.
But now they're realizing, hey, it's leveled off.
Yeah.
Let's be honest. We got a new president in the office now. Outlook is a little bit good. I don't want to talk politics here, but
Yeah, let's not
so
talk
when you
politics.
get the confidence and you still have a shortage. Now I'm just talking Baldwin County and Mobile
Right.
County. Now on a macro level, it has affected a lot of, especially with the previous administration. They were not as pro-business as the
Right.
new administration
Mhm.
is. And our rate's going to go down. You're seeing the feds and Trump going at it right now.
Mhm.
But at the end of the day, what dictates that is how strong the market is.
Mhm.
And your CPI data is still coming out with unemployment and everything else. I'll be shocked. Now there could be some pressure and you might see a quarter, 25 basis points drop.
But I don't
It's not
think
gonna be
anything
much.
drastic, right?
Yeah, so when the market's steady like that,
Mhm.
your investors like
Right.
steadiness.
absolutely.
They
Yeah.
don't like when
The
it's
drastic changes, yeah.
exactly.
Yeah.
When it's chaotic and
But if it
everything.
would
So
Yeah.
just a little trend
Well,
down,
I will.
think
yeah,
that'd be good.
well, I
Yeah.
think eventually it will.
But
I think it
doesn't
will.
really have to go a whole lot, I don't think.
Well, look, you look back on if you want to go back. Well, now it's 20 years. I mean, but
I know, that is a long time.
early 2000s. This is where the rates were back
Right.
then.
That's
You
right.
know,
That's what I
this is
said.
what-
7.4 is the average over.
we were right
Yeah.
here. I mean, we were doing it.
And
And,
Yeah.
you said you
and-
got what?
I was at 8.5 in 98.
In 98?
Yeah.
Okay.
But I will say this, so because this is a misconception. When the prime rate, which is what the Fed adjusts, when that is
Mhm.
adjusted, that doesn't necessarily mean the long-term
That's
rates are
right.
going to go down.
Yes.
Because it is related to the treasury market, the bond market.
yes.
And so that is totally non-related. And sometimes we'll even have an increase, like a knee-jerk reaction
Really?
to the lowering Fed rate. Yeah.
So that just affects like short term, like, or maybe credit cards.
Credit cards,
and
car loans,
yeah.
you know,
Right.
things like that.
That's what.
Mhm.
So Wall Street Journal Prime, that's the base rate,
Right.
right?
Mhm,
Wall
mhm.
Street Journal. That's what banks use as just a guide for all banks to use. Now, can
Yeah.
you do prime minus a half,
Yeah.
prime plus a half? In the commercial world, that really just comes down to your strength of credit, right?
Mhm.
The riskier
Yep.
the loan, typically the way it works in life, in all aspects of life, the riskier the loan, the more you're going to pay.
The more you're
That's
going to
in
pay.
a rate.
Yeah.
You know,
Just anything.
Yeah.
that's how
anywhere.
banks, and that's what I do. I assess the risk for the bank. You know,
Right.
so we're constantly looking at that. In the bank's eyes too, we need to monitor what we're doing because that's how banks can get in trouble with the rate risk,
That's
right.
right.
So you got to keep an eye on that. So to go back, what we were saying is, I think it's going to be steady through the rest of this year for 2025.
That's kind of what I'm hearing too.
Hopefully,
think
we'll
so,
see
too.
a slight
Yeah.
drop. You know,
Yeah.
we'll go from there. But to answer your question on the what you were asking me earlier is the builders. So yes, while rates are a little bit higher, the builders are just adding that cost, and at the end of the day, that cost gets passed down to the
borrower.
consumer.
Yeah.
Yeah. I mean, that's typically the way it
That's just the
works.
way it
You know,
works.
if you're an investor and you've got income producing property, a little strip mall or whatever, you're going to build that extra interest expense that you're
Yep.
paying now that you weren't paying back then, and it gets passed on. You know,
Yeah.
that's typically the way it works.
Yeah.
So it's a little bit different in your area, you know,
Yeah.
with
A
your
little bit.
rates.
Yeah.
But we're basically, you know, we're seeing a lot of good stuff going on right
Mhm.
now, especially in Baldwin County.
Yeah. I see the numbers. I see what y'all are
Yeah,
doing.
y'all
It's
are doing a lot
impressive.
over there. It is impressive.
Yeah.
We like to stay busy.
Yeah.
Yeah.
Well,
You're busy, and it looks like you have a good business banking team as well.
We
I mean,
really
I'm
do.
sorry, going back to business
no,
again.
that's fine.
Y'all do, and
Yeah.
happen to be fortunate enough to work in that office and really get to know everybody, and they're great over there.
So I appreciate
know
that.
Jamie's doing fabulous.
She is. She's
Um,
wonderful. We have an incredible team.
Yes.
Very knowledgeable people, very experienced. Oh my gosh, if I could add up all the years of experience that
Yes,
we
I
all
know.
have. Now we have some new ones, you know, that have a little ways to go, and we're training
Hey,
them up as
we
well.
all were there one time.
We all were there,
So,
and it all comes down to being a mentor to them.
right.
Right.
I totally agree.
If you're not mentoring
Mhm.
your other employees, then personally, my own
You're doing
personal
them a
opinion, you're doing them a
disservice.
disservice.
That's right.
I had a mentor. I had really, really good mentors. My main mentor, I'll say,
I know
was
who it
Margie
is. I
Grayson.
knew it was her.
She was the first when I started out in the branch and the retail side.
Mhm.
She was just such a wonderful lady.
I think
she kinda
everybody
took me
needs
under
a
her
mentor.
wings.
I mean,
She
yes.
pulled me by the ear a few times.
Did you
know,
really?
oh no, I'm just
like,
kidding.
Okay.
But
I can
yeah,
see her
she
doing that though.
well, she totally would.
Yeah, she would.
But yeah, so
That's
everybody
awesome,
has
though.
a mentor,
Yes.
and I, you know,
And I feel like that
so-
is our job to do that and help people develop. And I think that's what's good about Century Bank. They allow us to do that. And
Exactly.
they want to promote within. They
Correct.
want us to mentor people. And it just works so good, doesn't it?
And you're doing a fabulous job
I
doing
just-
that as
I
well.
just
I know
love
you've
it.
taken on your new role and you're mentoring and helping with calls
Yes,
and
yes,
sales.
yes. I love it.
And so I hear a bunch of wonderful
Oh,
things.
do
So
you really?
I do.
I like to hear that too.
Absolutely. Yeah.
Yeah, we do. I think that and the managers are all got on board. They love it too. It gets them out seeing their customers, not
Right.
just waiting for them to walk in the door.
Correct.
So-
You got to get
And
out
some
and
of them
touch
don't walk in the door
customers.
because that's not how they do their business.
Right.
Somebody brings it for them or whatever.
Yeah.
Anyway, so we've been doing a great job at that.
You
So
have, absolutely.
they've been great. It's the
And
managers have just
it's-
stepped up.
It's all about
So-
contacting the customer. Some
Mhm.
customers don't like to be contacted all
This
the
is
time.
true.
You know?
And you
And
kind of
that's knowing your
follow
customer.
that.
You got to know
Yes.
your customer.
Mhm.
And, you know, sometimes you're walking
That's
in
right.
and you think you're just going to go sit down and the customer's like, I am busy. You know,
Uh-huh.
Yeah.
you
You're not
come
sitting
back
down, you're
later on.
standing.
Yeah. You're like, I
Yeah.
certainly will.
And that's okay. We
It
understand
totally
that. We
is.
really just want to touch them and let them know we appreciate them.
Exactly.
So,
That's right.
and you call on realtors? Is that
Realtors and builders.
Builders,
Yes.
okay.
And I'm a member of the HBA in Mobile as well.
Awesome.
So we have a meeting this afternoon.
Oh, do you? Okay.
Yes. So it's a good
well?
little program.
Then I guess that brings us to we probably should let's talk about next time. I think we're gonna talk about fraud prevention.
Okay.
Well, that's
How about that?
That's a
big
good
topic.
that is a
topic,
big
yeah.
I
topic
mean, how
there.
many people
and-
tell you my card got compromised?
oh my gosh. Well, the biggest
And what do I
thing.
do? You know,
Yeah.
so what we want to do is, go ahead. You
No, I was going to say
Uh,
wires are probably the biggest
right.
fraud
What
right
we
now.
want to do is go into more of the prevention part, things that you can do, and just know more about it.
Right.
So anyway,
Good.
Yeah,
that's what
that'll
we're
be a
gonna do
good
next time.
topic.
Awesome.
Yeah.
Well, who's going to be on that call?
So you need to make sure that you like and subscribe.
Okay.
That is because I know our we just really enjoy doing this. This is like our
Yeah,
fourth
this
one
was
now.
fun.
Yeah.
And-
I enjoyed this. Good
We
conversation.
haven't sat down and talked like this for a while.
Well, it's been a while.
So but anyway, it's been great having y'all here today.
Thank you.
I
Thank you.
appreciate you coming.
I appreciate it.
And y'all look for next podcast,
We will.
and we will see you all next time.